Namaste. Let's discuss one of the important topic of IND AS 1, that is classification of assets and liabilities in current and non-current. So every entity who is presenting the financial statement shall present its assets and liabilities in current category and non-current category. But in case the more reliable information is available based on the liquidity approach, in that case the classification can be done on the liquidation basis also. In case of financial institutions where liquidity provides information that is more reliable, then the classification of current or non-current, so liquidation method can be used. And in case the entity is in diversified business and some informations are more reliable based on the liquidity and some classification is more reliable based on the current and non-current concept, in that case mixed approach can also be used. India says that whatever approach you used, whether classification based on current and non-current or liquidation basis or on the basis of mix, we are supposed to classify the assets those are due for settlement or are expected to be realized within a period of 12 months from the reporting period or within a period of more than 12 months. So in this case, the purpose of this classification, if you see, is just to provide information by distinguishing the net assets, those are contributing and circulating as a working capital, from the assets those are in separate segment of long-term operations. So the purpose of this classification is this. Let's take one example of capital advance. We will classify the capital advance as non-current asset because exchange of capital advance with the fixed assets does not result in any cash realization. Rather, one non-current asset is converted into another non-current asset in respect of the fixed assets. So this classification is based majorly to provide the information about the working capital assets classification in non-current and current. Assets will be classified as current asset if it is expected to be realized or intended to sell or to be used in consumption within operating cycle of the entity. So operating cycle plays an important role in classification of assets and liabilities in current and non-current, and this we'll discuss in next slides. So if the assets are to be realized or to be sold or to be used within operating cycle, it will be classified as a current asset. And if it is held for the purpose of trading, it will be classified as current asset. And it is expected to be realized within 12 months from the end of the reporting period. In that case, also it will be classified as current asset. And next is if cash and cash equivalent, unless those are restricted for exchange or use for 12 months, more than 12 months from the reporting period, in that case it will be non-classified. If it is available or restricted for a period of less than 12 months from the reporting period, it will be classified as current asset. So if any asset fulfill any of the criteria given here, it will be classified as current asset. Let's take one example. If we are having some slow moving finished good inventory that is expected to be realized in cash beyond the operating cycle or beyond the 12 months period. So how it is to be classified as current or non-current? So in this case, we need to check all the four conditions. Fourth condition is out of the scope because it is not cash. So we need to check remaining three conditions. The example says that it is expected to be realized beyond operating cycle period, so it is not going to fulfill this condition, and it is also not fulfilling the third condition because that expectation is of realization is beyond 12 months. But it fulfills the second condition, that finished inventory, although it is slow moving, but it is held for the purpose of trading, so it will be classified as current asset. So we need to check all four conditions along with the operating cycle of the entity for classification of assets in current and non-current. Similarly, in case of liabilities, it will be classified as current if it is expected to be settled within operating cycle or held for purpose of trading, or it is due to settle within a period of 12 months from the end of reporting period. So if these conditions are satisfied, liabilities will be classified as current. Apart from it, there is another one condition that if there is an unconditional right to defer the settlement after 12 months from the reporting period, and this settlement right lies with entity, in that case, liability will be classified as current. And if this right of unconditional settlement lies with counterparty, in that case, it does not affect the classification. Similarly, there is one more important thing, that if settlement by issue of equity instrument at the point of counterparty, in that case also it will not affect the classification of liabilities in current and non-current. IND AS 1 is very particular about the liability classification into current and non-current. It says that liability will be classified as current if it is due to settle within 12 months from the end of reporting period, even if the original term of the liability was more than 12 months and the loan has been refinanced or rescheduled, and agreement to refinance and reschedule was completed on long-term basis after the reporting period and before financial statements are approved. So in this case also, the liability will be classified as current. So it specifically says if at the end of the reporting period, the loan liability was due within a period of 12 months and after the reporting period, there has been agreement to reschedule it or refinancing it, that results into liability period of more than 12 months. Even in that case also, it will be classified as current liability because the refinancing agreement after the reporting period is considered as non-existing event as per IND AS 10, events after the reporting period. Let's discuss another concept of classification of liability in current and non-current. If there has been breach of material provision of loan agreement and because of this, the loan has been payable on demand at reporting date, in this case, we are not supposed to classify it as current liability if after the reporting period and before the financial statement are approved for issuance, lender agreed not to demand due to breach of the provision. So if lender has agreed after the reporting date and before the financial statement approved not to demand because of breach of the provision, we are not supposed to classify the liability as current. In another case, we need to classify liability as current if lender agreed to provide a period of grace at least 12 months during which breach need to be rectified and lender is not supposed to demand repayment immediately. So there is one interesting point in it. IND AS treats an agreement to refinance or to reschedule payment on long-term basis after the balance sheet date as non-existing event, but lender's waiver to breach of material debt is considered as an existing event. So there is this is interesting topic in this that affect the classification of liability between current and non-current. This is all about the classification of liabilities between current and non-current, and IND AS is very specific about the liabilities classification and has given different scenarios that we need to consider. So this is all about it, and if you want to discuss and you want to know more about it, or if have any query, you may contact on the WhatsApp number given on the screen. Namaste.